As the title suggests, in today's video, I will be sharing with you the essentials you need to know about the Singapore-listed APAC REIT in terms of the property types the REIT invests in, financial performances, distribution payout, portfolio occupancy, and debt profile over the last 5 years, together with my technical analysis of the REIT's recent unit price movements on a weekly time frame, where you will find some of the key price levels along with the corresponding distribution yields. Let's get started. First, a brief introduction about the REIT. Listed on the Singapore Exchange since 2007, it invests in real estate properties used for industrial, logistics, and business park purposes, with its geographical focus in the Asia-Pacific region. As at the end of financial year on 31st March 2024, its portfolio comprises 28 properties, of which 25 are in Singapore and 3 in Australia, with a portfolio value of 2.16 billion Singapore dollars. The Singapore properties contribute 68% towards the REIT's portfolio value, while the Australia properties contribute the remaining 32%. The REIT sponsor is Sydney headquartered AMES Financial Group, a diversified financial services and investment group active in the areas of funds management, mortgage lending, investment banking, and property management. It is also the owner of the Sydney Stock Exchange. Looking at AMES APAC REIT's financial performances and distribution payout over the last 5 years, its gross revenue has recorded improvements every single year over the last 5 years, where it rose from about 119 million Singapore dollars in the financial year 2020 to about 177 million Singapore dollars in the financial year 2024. In terms of the compound annual growth rate of its gross revenue over a 5-year period, it is at a very decent rate at 8.7%. The REIT's net property income saw a slight decline of about 1.8% to 87.5 million Singapore dollars in the financial year 2021, mainly due to higher property expenses. In terms of its compound annual growth rate over the last 5 years, it was like the growth rate of its gross revenue at 8.0%. Moving on to the distributable income to unit holders, as a result of lower net property income in the financial year 2021, its distributable income for the same financial year also fell by about the same percentage. Apart from it, the remaining years saw its distributable income recording a year-on-year improvement. In terms of the compound annual growth rate of the REIT's distributable income, it is at 2.2%. Finally, on its distribution payout, AMES APAC REIT remains one of the few Singapore REITs that have maintained its quarterly distribution payout. Hence, for income investors who are looking to invest in REITs with such a payout frequency, this REIT is one you may have a look at. Looking at its distribution payout over the last 5 years, it fell in 2 years, in the financial year 2021 as well as in the financial year 2024. For the financial year 2021, it was due to lower net property income as well as the management fees being fully paid in cash. Whereas for the financial year 2024, it was due to a larger unit base as a result of a 100 million Singapore dollar equity fundraising exercise done in the second quarter of the financial year to strengthen its balance sheet, as well as to fund for the 2 identified asset enhancement initiatives in Singapore, namely in 7 Bulim Street as well as 26 Tuas Avenue 7. Next, let us take a look at AMES APAC REIT's portfolio occupancy profile over the last 5 years. The REIT have maintained its portfolio occupancy at above 95% throughout the entire 5-year period I have looked at, which is very strong. For the latest financial year under review, its Singapore properties have an occupancy rate of close to 98%, while its Australia properties have 100% occupancy, with a positive rental reversion for new and renewed leases at a very impressive 24.3%, largely contributed by positive rental reversion of 26.5% for its logistics and warehouse properties. Lease expiries were also quite well staggered over the next 2 financial years at about 18.5%. However, as at 31st March 2024, the REIT's top 10 tenants contribute about 51.2% towards its gross rental income, with the top 2 tenants in Woolworths Limited and Optus Administration, both of them master tenants in the respective properties, contributing 13.8% and 10.2% respectively, which is slightly on the high side in my opinion. Looking at Impact REIT's debt profile, it is a healthy one, where its aggregate leverage have been maintained at about the 30+% range throughout the entire 5-year period. The REIT also has a reasonable percentage of borrowings hedged at fixed rates at about 73% in the latest financial year 2024 under review. In terms of debt maturity, it has about 14% of borrowings due for refinancing in the financial year ahead. Most of its borrowings will only be maturing in the financial year 2027, which by then, interest rates should have come down to more reasonable levels in my opinion, and its all-in borrowing cost should come down as well. Let us now move on to my technical analysis of APAC REIT's unit price movements on a weekly time frame. I have marked out some of the key price levels based on my technical analysis, along with the yields based on those prices, calculated based on its distribution payout of 9.36 Singapore cents declared in the financial year 2024. Unlike many of the REIT's unit prices which have tumbled, APAC REIT's unit price has largely remained stable and moving in a range of between 121 and 132 Singapore dollars since September 2022. To sum up, APAC REIT caught my eye for its improving financial performance over the last 5-year period, where both its gross revenue and net property income have recorded a growth of about 8%, which is, in my opinion, a decent rate. Portfolio occupancy has maintained at a high level of above 95%, which passes my criteria for selection. Also, in the latest financial year, the REIT has reported a positive rental reversion of about 24%, which is very impressive in my opinion. Debt profile is also very healthy, where its aggregate leverage has been maintained at around the 30+% level throughout the last 5 years. One slight negative, in my opinion, is the decline in its distribution payout in the latest financial year due to a higher unit base. And looking at the financial year ahead, the enlarged unit base, together with higher financing costs due to interest rates still at a high level, we could see the REIT's distribution payout decline further by around a low to mid single-digit percentage. Another slight concern I have is in its tenant concentration, where the top 10 tenants contribute slightly over 50% towards its total gross rental income, which in my opinion is on the high side. With that, I have come to the end of today's video, where I look at APAC REIT's performance in terms of its financial performance, distribution payout, portfolio occupancy, and debt profile over the last 5 years. Please note that everything I have just shared is purely for educational purposes only, and they are not buy calls for the REIT's units. You should always do your own due diligence before you make any investment decisions. Finally, if you find this video useful, I would greatly appreciate if you could give me a like. If there are any Singapore REITs you would like me to do a video presentation on, like the one you have just watched, please let me know in the comment section below. Thank you for watching, and I look forward to talking to you again in the next video.